What's up team? Welcome back to another weekly analysis video. In this video I'm going to be going over all of my open swing positions, and I'll show 3 swing positions that I'm looking at entering as well to give you guys an indicator of what's coming up next basically. So within this week we've not had too much action from the swings. It's been kind of counter trend this week, as you can see from this is a perfect resemblance where price was in the trend. We've now gone a bit counter trend, and then it looks like we're starting to push back in trend direction, which is the case across most positions. We've managed to catch a couple new entries this week, which is good, and they're looking pretty good to start off with, but obviously don't speak too soon. However, we have had the necessary candlestick rejections that we needed for entry, and everything's going our way at least. So all's well there. In terms of day trades this week, because it was counter trend, we didn't make any profit this week on the day trades. It was mainly break-even trades for us, where price would initially push in our direction. We'd set our stop loss to break even, and then price would come down and hit the break even. Just because it's been a counter trend week, you know, when we're trading a strategy like this, which is trend continuation, whenever you have a period of counter trend movement, you're not going to make any money, but it allows you to catch entries from that counter trend. So let's get into the video. Aussie Swiss, nothing really further to update here. As I said, the price has been dropping, came near TP1, had a little counter trend move, and then it looks like price is trying to push back in our direction. If we check on the daily, this whole section of price action was sort of pushed back up. We've seen price retest this area here, so if I draw that visually, you can see where we had a previous area of support which is broke beneath. Prices basically just came up, retested that. We had 3 inverted hammers on the daily, and now it looks like price is trying to push back lower. Price did come up near the EMA, which was used as resistance previously, but mainly it's this area of support that prices came up and retested again. It retested it all here and then dropped off. It's just doing the same thing again, and then hopefully price is going to push back into our direction. Once it does, we will see TP1 make 2.6R and TP2 make 3.4R. So just a patient waiting game in swing trading. Aussie JPY. This one, we're just waiting for TP3 on the position that came from down here. I'm not too sure if I will look for a re-entry, just because price is having trouble breaking this previous high basically. So I'll see what price action's looking like when price does near this EMA again, because it has been used as support consistently. What we'll do is we'll look to see, but the thing that I don't like is that it hasn't made a new high and then came back down, so it's not as bullish as it could be essentially, because the high that we've made here isn't higher than this high, which isn't really a sign of strength. It's not necessarily a sign of weakness because it hasn't broke any structure. We're still making higher highs and high lows, but yeah, I might not re-enter there, but at the same time I might. So we'll just see what price action looks like at the time, see what the rest of the market is saying, and then we might have a setup where we've got 1 touch, 2 touch, 3rd touch. We've got the EMA for support, and then we'll line up the fib level probably from one of these lows here to this previous high, and then we'll see if we get a trade out of that. CAD Swiss franc on the daily. This one is dropping down now. We've had a lot of manipulation in the markets in the past week, so you can see where the previous support level was, and the key area of interest. Price pushed well through that, well above the EMA. We had the Bank of Canada news today. I think it was an interest rate decision, where before that it looks like price has just been manipulated against that, because a lot of people will have been expecting sells. So obviously the market makers have just been pushing price higher to manipulate. But now that the news is released, price is dropping down as it should. Obviously we didn't have to gamble on the news. We knew price was pushing. Well, we knew price was more likely to go down than it was go up. So we had our analysis set there. But yeah, it looks like today's a very negative day for the CAD, which is good for us because we're in CAD sells basically. So here's what we're looking at. We've got our break even to stop loss to break even level set. Once price hits that, then we'll put our stops to break even and let the trade run risk free. But until then, we basically want to look for market close today. We want to see the close back inside this trend line. So where you've got one touch, two touch, this was the third touch. Although price was manipulated out of it, our stop loss left plenty of breathing room so that we're still in the trade. What we want to see today, even if price does retrace up a little bit, we still want to see the market close inside of this trend, and then that's telling us that it wants to stay within the trend and keep dropping basically. So good entry here from us. This will be a 2.9R total once this plays out. Sheaf JPY, I'm not as happy with this as I was last week, basically because if you look at the daily price action at the previous high, it looks like we are seeing a lot of resistance from this. So where you had previously a strong steep trend, it looks like now the gradient is sort of falling off like this essentially. So when you have that sort of curved motion and price stops being steep, it's an early sign of a retracement. So from the swing position, all's looking good. However, we are seeing a weekly shooting star, weekly inverted hammer. So we caught a couple of break evens on the strategy on a day trade perspective on this, and I think it might look to retrace further before pushing higher again and hitting our take profit. So this is where patience comes into play in trading. Sometimes your position will go heavily one way, and then it just needs a breather to gather more liquidity from down below before pushing back higher. So we might have to be a little bit more patient on that, but we've already cashed out 50% of the position at TP1, so we've already made about 1.25% from it. We're just going to hold on until it hits TP2. Our stops are at a break even anyway, so this is a guaranteed win at this stage. I mean, we've already won from it, we're just waiting to win even more. But yeah, I think looking at the price action at that previous resistance, we might see a retracement to gather more liquidity from previous levels before price pushes up to the upside. Pound Swiss on the 3-day, first touch, second touch, third touch. EMA was resistance, and it is again. We had a few days of rejection. So we had one spinning top, one inverted hammer, one shooting star, so 3 days. We got an entry at our level, and now we're just waiting for price to basically hit our stop loss to break even or hit stop loss. Price immediately looks like it's rejecting the level that we were watching, and he's pushing to the downside. So we'll just see how this one develops, but this one's met all our criteria. We've got previous support that is now resistance, and yeah, we'll just see how this one plays out. But you can see with the strategy, once you've got your technicals lined up, it's just about understanding the fundamentals of the market, of when to trade and when not to trade. And every trade pretty much looks the same once you've got the same technical setup. So it's just a case of rinse and repeat. You're going to have losses, you're going to have wins, but when you've got your strategy arranged properly, with proper trade management and risk management, your wins will always outweigh your losses in the long run. So we're just going to wait to see how this one plays out. Again, it looks really good to start off with. Pretty similar trade to CAD Swiss. We're seeing the CAD Swiss drop off. These two pairs are about 80% correlated. The reason I've took both of them today is because one of them is on the 3-day and one of them is on the daily. So I see this as a little bit, although they're 80% correlated and we're trading them in the same direction, which sometimes isn't the best thing to do, I think it's better that on this pair we've got a lot more breathing room, whereas on CAD Swiss we've seen a lot of manipulation on this previously. So I don't know whether this one might hit stop loss to break even and then come tap us back to break even and then push off to the downside. In the event that that happens, this position should be relatively safe from that exposure. So because they're on two different time frames, I'm allowing to take both of them essentially, just in case people were ever wondering why, because sometimes I do preach about not putting more than 1% on the same idea, Whereas this is kind of the same idea, but it's also not. We have the 3-day exposure on this position, so we're going to allow it. New Zealand JPY, we had the entry here perfectly. Price is pushed up. We're seeing again a little bit of a retracement. I think price is just trying to follow this trend. It's had to take its foot off the gas a little bit this week, but I think this one should just still push up higher. Regardless, we're risk free, so no matter what, we're not taking a loss on this one, which is fine. Again, I'm gonna see about the 3-day EMA on this one, because you can see the EMA on the 3-day has been respected perfectly every time, and it looks like price might try and retest that once again, and we might be able to get a re-entry on that position. The only thing that's giving me a little bit of pushback on that is the fact that we do have open trades on that, and they are risk free. And the whole point of being risk free is that if price pushes against you, you don't lose any money. Whereas if you're now re-entering open risk, you're kind of defeating the purpose of that. I really don't mind it once they've took out profit previously, because you kind of just reinvest in the profit that you've just made from hitting a TP. But in this circumstance, price hasn't broke the previous high. So we're sort of re-entering when we haven't even taken profits from the first trade yet. So it's a little bit of a different circumstance than re-entering this trade from this trade, because from this trade we already made profit that we can then just put into the next stack trade. But this one's different. So again, we'll see what price is looking like, and we'll see how the market's communicating things to us closer to price being at the EMA, if it ever does even reach there. But this could be a stack trade, this could not be a stack trade. We might just hold what we've got essentially, but we just got to give it time, just got to be patient with it. And we've got 2 solid trades here, so nothing wrong with just letting them run. Right, so you've seen all of the open trades that we're in. You've seen the strategy, an overview of it, and you've seen how it's currently playing out in the market. You've been given a signal on New Zealand JPY. This is a potential trade. And you've been given a signal on Aussie JPY, where this might come back down to the 3-day and push higher, following that support. So now I'll give you one more free trade that we're looking at. So here is a swing trade that we're looking at taking on Euro Swiss on the weekly. You see the weekly EMA has been used as resistance many times, starting off, I'd say properly starting off since July 2021. It did briefly push up for a week, but then it tweezer topped the very next week. Since then, price has really failed to close above this EMA. Now, what we're looking at is we've got a trend line here. First touch, second touch. I'll align that a little bit better on the weekly. And we're seeing that this static trend line is meeting this dynamic trend line at around about the same place. If price can come up off of this weekly open and this significant low, if price can come up to the 78.6 and the 71% level, somewhere in between there, we've got this huge fair value gap on the weekly. I don't really use fair value gaps, but it is a point to note out, so it's just extra confluence. We've got this area of support. I'll line it up a little bit better with the fib level. So you see where price came down and found support here. It's now broke beneath it. Got tapped as a retest there. We're basically looking for this to come up and act as resistance where it used to be support, and then push back to the downside essentially. So that's a trade that we're waiting on. Obviously this is swing trading. The benefits of swing trading compared to intraday trading is it's a lot more passive. It's a lot more easier to follow alongside a 9 to 5 or another hustle, and it grants you a lot more freedom. You'll generally make somewhere around about 5% a month. Obviously you can see our previous results. January is always a very slow month in swing trading because we are trading trend continuations, but there's often a lot of consolidation in January based on people waiting for significant news to drop, which sets the precedent for the next few months. So there's a lot of consolidation, typical low volume at the start of January, so we've not got too much trade at the start of January. Now we're getting like to the back end of January, we're getting new entries and new trades, but you can see the average from November, December is 8.5%. So you hear a lot of intraday traders talking about they make this, they make that, they're doing all these, but they generally don't post too much more than 10% a month. And in the meantime, they're glued to the screen 24/7. They've got to wake up super early to catch the market open, and it's pretty much like a full-time job. It's more than a full-time job being an intraday trader. You're sat watching these bloody 5-minute candles tick away, and just sat there glued to a screen watching this play out. It's super boring. So the way that we like to trade is swing trading, a lot more passive. You're basically letting the market come to you rather than trying to sort of approach the market. You're working for money with intraday trading, whereas with swing trading, your money's working for you. It's so much more scalable, so much more passive, and yeah, there's pros and cons to both. But swing trading, there's so many more pros to it than there is cons. So do consider a swing trading approach. I've been in both, guys. This is why I'm saying this. I've been swing trading, I've been intraday trading, and I know how much of a slave to the markets you are when you're intraday trading, sat glued to the screen. And I feel like a lot of people get into trading for freedom, and then they just let trading take away their freedom. So it's one of those catch-22s. But with swing trading, you completely get rid of that. With swing trading, you can do like 1 to 2 hours analysis a week, set your alerts like I do here, and then you just let the market come to you and decide at the time if the trade's worth taking. So this is a more professional approach to trading the higher time frames. This is how a lot more institutions will have their discretionary traders trading, and then you can just leave the intraday to the algorithms, which we also have available as well. So our intraday algo's done anywhere from 27.5 to 55% returns this month, completely hands-free. Depending on your risk level, that's why there's such a huge range there. But yeah, I prefer to just leave the intraday trading to the algos and the EAs and stuff, and then the discretionary high time frame trading approaches that you can run on funded accounts. Here's the setups that we're looking for. So enough rambling anyway. There's all the positions that we're in, and there's 3 setups that we're currently looking at. So I hope you found value and education in this video. In the VIP video, which I'll be recording next, I'll be going over all of the pairs that I'm looking at and all of the day trading setups that we're looking at as well, which are a little bit more higher volume, because we're trading the 4-hour, 8-hour and 12-hour time frames rather than the daily to the weekly. So get yourself inside the VIP if you do want a faster trading approach. And yeah, until then, I'll see you next week.